Hello and welcome to GoodGood Investing. My name is Rachel Grunn.
And I'm Andrea Cwik.
I feel like we're back in like COVID times right now with like our long distance recording habits.
Yeah,
With
but
you.
thank no, it's convenient though at the same time too. You saved yourself a 20-30 minute trip. But yes, the reason why we're not together is our kids, me and my husband's kids, uh my children, they are coughing up a storm over here, and including my husband. And I don't know, some respiratory stuff happening. There's like a bug going around now that they started school. So, yeah, I'm trying to keep you safe so you
No, I
can take your
appreciate it.
trip.
And I know our last recording session was because of me and my family. So it's going around. It's fine. It'll all be good. Gratefully we have technology like this to still record together. And have fun doing it. So yeah, it is more convenient for sure, but still miss your face. Anyway, I'm about to leave for a very long, very exciting European trip, which will be wonderful, wonderful. Which is why we're recording a few episodes ahead of time. So apologies if this
Yes.
is a little bit delayed. Right now in Texas, it's like 130 degrees outside, and when this recording comes out, it might be 65. I don't know. Texas is crazy.
Wait, okay, tell us a little bit about your trip. Where are you going and why and what you're going to do?
Okay, so I am going to, I'm going to Spain, which is for my stepmom's birthday. She's turning 60. So the whole family is coming to Spain, and it's going to be a really fun time. Willow's going. My brother is going with his wife, my sisters. It's just going to be like a whole family affair. We got a huge Airbnb with a pool. We're going to have a blast. It's going to be so much fun.
Wait, can we talk about the birthday present or we can't talk about it? Will we have
Can't.
to?
It's a surprise. Yeah.
Okay,
We can
okay,
talk
okay.
about it. We can talk about it when I get back.
Okay.
I doubt my stepmom listens to the podcast. If you do, hey Sylvia, shout out. But yes, we can totally debrief on all the craziness that ensues because it's gonna be crazy. I'll tell you that now. That's the only thing I can spoil. The present is insane. So, but it's a huge surprise that we've been keeping for like years, literally like 2 years.
That's
So
crazy. Wow.
yeah,
Okay, I'm
yeah.
privileged to know.
You're very privileged to know. So we'll talk about it when I get back. It'll be worth the wait, I promise. It'll probably honestly be like one of the next episodes, I bet, because we're recording these a few weeks ahead. So yeah, hang tight for that
TBD.
story.
TB.
TV,
Yes. Okay, so
excited.
what country are you going to again?
Spain, the south of Spain.
Spain. And you're staying there for the whole 4 weeks?
Well, it's more like 3-ish weeks, but yeah, it'll be fun.
I've never been to Spain. That's one of the countries in Europe that we have not touched yet, but I've heard amazing things. So I want to hear all the details and stories.
It'll be
Because
my first time too, surprisingly. I've
that
never been
is
either.
surprising. So
Yeah.
no model gigs while you're there, anything? Nothing
No,
scheduled?
nothing scheduled, just full hanging with the fam. It'll be great. My parents have a house there, so we're just gonna stay like down the road from them. So we'll probably spend a lot of time at their house, but it'll also be cool to have like a kid's house, like a where we can just get crazy. And no one's
Oh,
pregnant. No one's pregnant. No one's pregnant. My sisters aren't pregnant. My sister-in-law's not pregnant. I'm surely not pregnant. So we're just gonna party. It's gonna be so fun.
and then tell our listeners how many siblings you have, because that will be like a very fun crew.
Okay, so there's 5 of us, and 2 of us are married. So party house is gonna have like 8 people in it. It'll be. I'm so excited. I can't wait. And granted, we have Willow. We have
Oh,
an 18-month-old, which is a bit of a party pooper, but we'll just put
she
her in a room.
parties.
She'll party. She'll party all the way till 7:30 p.m. So she'll party hard and then go to sleep. But yeah,
Aw.
we're so stoked. I can't wait. It'll be great.
What's the
Okay,
weather? Wait, what's the weather gonna be like? Is it gonna be as hot as Texas?
no, think of California. It has a very California temperature, temperate. So it's very arid, kind of like a desert like California. So it gets warm during the day and very cool at night. So at night it'll probably be like 65, and during the day it could probably get up to 85. It's on the south coast of Spain, very close to Africa. So it is very desert feeling. And then the water is freezing cold. So it is just like California.
Yeah, it is. That's
Yeah.
where I'm from. Wow. Okay, that's a good picture of where you're going. All right,
Yes.
now we can get on to business.
Let's get to business because y'all probably don't want to hear about my Spanish trip. You do want to hear about it after it happens, but before it happens, it's all just kind of hypotheticals. But we will debrief on all of the chaos that ensues. So today we're just talking about like the current state of the multifamily market. What's going on in multifamily? We have not talked about multifamily in a minute because Andrea and I are really expanding into different types of asset classes. But let's just like take a break, debrief, reset. What's going on in the multifamily world?
Yeah, so we'll give you our experience, our firsthand experience about what's going on, and then kind of what we're hearing about in the market from all of the experts and all the things happening with the interest rates and all of that. But from a personal perspective, I am invested in over 1,800 doors. And so that's about 8 to 10 deals across the United States. Some occupancy issues, which means occupancy is going down on some of them. Some of them are staying up. We've not increased rent as much as we have expected on some of our assets. And we have paused all cash flow, even from my passive investments. Cash flow has paused. And that doesn't mean that we're not actually gaining, the cash flow in a quote unquote, like bank for us for the future. But we don't have any cash flow right now. We're still earning, all of the appreciation and stuff. But yeah, it's paused, which has been surprising. It's been surprising, and now we're just kind of used to it. Our investment is there. It'll be there, hopefully still for the 4 to 6 years, and then we'll see some appreciation at sale. Some of our assets that we're investing in are having a little bit of concerns because with occupancy down and interest rates going up, we're having negative NOIs, which means that if they are holding on to the apartment building, you always want to see a higher NOI because that means a higher sales price. So some of my deals, we're looking at getting um, more investors in or more investments from the current investors just to float the deal until we are able to sell it for a higher price.
Or
How about
refinance it out of a higher interest rate.
right, right, or
So
refinance? Yeah.
the issue that's been happening in the multifamily market is bridge loans. That is like the thing that has been hurting deals. Bridge loans, period. And it's because bridge loans are technically short term loans that are just meant to get you through the renovation part of the hold. So most bridge loans are maybe a year, 2 year terms, like they're very short term. And the idea is to refinance the bridge loan into conventional debt. The trouble with the bridge loan is it's variable interest rates. So some people would buy a rate cap, which means they're buying the right to cap their bridge loan interest rate at a certain percentage. Some people were just like, hey, interest rates are low. They're probably not going to go up that much. We'll save money. We won't buy the cap because they're expensive, like a couple $100,000 for interest rate caps. We won't buy the cap. We'll just cross our fingers and toes that the interest rate doesn't go up too high. What happened was a lot of people went under contract, had their bridge debt. Obviously, interest rates increased a lot over the past 24 months or 18 months, really. And deals were squeezed. Their debt servicing was a lot more expensive than what they had penciled in their underwriting. And so obviously the loan comes first. That is what you have to pay before investors, before contractors, before your property management company. You have to pay the lender. So even though the property was still making money, they were losing money because their expenses increased past what they had projected. So a lot of deals, what they're doing right now is they are looking for, and that's just not to say all of our deals. Actually, majority of our deals are doing super well, really well right now, considering the market. Right, they're not hurting for cash. Granted, all deals have stopped paying out cash flow to be uber conservative, but there are deals out there where they are, like Andrea said, having to raise money in the interim to pay the debt service until they can get to a refinance, and then refinance out of that variable debt interest into a steady interest rate loan.
Yeah. All of that to say, if you're a new investor, when you are looking at the analysis, ask your syndicator questions about what is the loan structure on the deal. Whenever we were investing in these deals, bridge loans or variable loans were totally the norm. Nobody would have expected there to be any type of hiccups because no one expected the rate to rise this quickly and so many times in this year. So let's pray that there's no more rises in interest rates and that we could, kind of get through this and get occupancy up and there not to be such a big gap in, NOIs for some of these projects.
And when we were talking on our previous episodes about, bad apples and syndicates and how to spot someone that really doesn't know what they're doing, so much of a syndication investment, especially in the multifamily space, you're running a business. So you need people on the team that are business minded, that know how to create contingency plans. They know how to execute exit strategies. Like, it's really important to have people on the team that aren't just closers, right? Aren't just good negotiators, but are really strong business leaders, because it is a business that you're running. There are other investments like triple net where you're not running a business. Okay. You're just collecting rent. So different investments do call for different types of sponsorship teams. So when you're doing your due diligence, you make sure that the people on the team know what they're doing and they have the track record to back it up. Luckily, our teams do. Our teams are freaking awesome right now during this time, and I just have so much confidence in our sponsorship teams because they are really like, what's the expression? I can't think of idioms right now, but when the going gets tough, the tough get going. And that's exactly what they're doing.
Yeah. I will say it's also important to see what kind of problem solving the team has. Like I love when I'm looking at a deal that not everything is based on the rental income, but if there is creative ways to bring in more income through alternative things to do to the asset, I'm like, oh, that's cool. They're thinking outside of the box. It's not just we're going to charge for parking, but it's like, let's put in some Wi-Fi package. So now we can increase income through, whatever, Wi-Fi or whatever kind of creative ideas. So yeah, I like to see that as well.
So, in summary, the multifamily market I don't know that anyone's going under contract to multifamily right now. I don't know of anyone that's executing deals in this moment of time. So multifamily is in a holding pattern. It doesn't mean that if you're invested in multifamily, your deal's going poorly, because equity doesn't hit your bank account. So, like Andrea said, the deal will sell in the next 5 years, and so much can happen in the next 5 years to turn around the market, turn around the industry, turn around the building, but you won't realize that equity until it sells. So just because money's not hitting your bank account today doesn't mean you're losing money, doesn't mean the investment's going poorly. In the future, when you're looking at multifamily deals, like Andrea said again, make sure you look at the debt structure, ask the hard questions. What type of debt are they getting? Are they getting agency debt, which is like a traditional loan? Are they getting bridge debt, which is a variable interest rate loan? And then what kind of experience do the sponsors have on executing business plans? Have they worked in a business before? What job did they have at that business? Are they great with admin and leadership and execution? Like, these are really important things to know before investing.
Absolutely.
Cool. Mic drop. Guys, if you have any questions about what we talked about today or anything else in the past, reach out to us, goodgoodinvesting@gmail.com. Check us out on our website, goodgoodinvesting.com. Connect with us. We'd love to hear from you. And we are here for whatever sort of questions, comments, feedback that you have. We would love to hear it. So until next week, don't invest good.
Invest twice as good. Bye.
Bye.